Hey, what's up? It's Ben here. I got a few people asking a lot about crypto investing nowadays, so I thought it would be a good idea to make a video covering most of the important stuff when investing in cryptocurrencies. Just like the stock market, you should probably by now know that you shouldn't invest with money you can't afford to lose, and you should always do your research before making an investment. Like all my videos, this isn't financial advice, this is only for entertainment purposes. Cryptocurrencies are very volatile and it can easily drop and gain 10% just overnight. Some will go to the moon and some will just crash and burn. And it's almost like gambling if you don't know what you're doing. But anyway, if you're just starting out and don't know much about cryptocurrencies, then here are the 10 things you need to know about crypto investing. Number 1, benefits of investing in cryptos. Like anything else, the more people start to use crypto in their life, the value of crypto will grow. Crypto can easily be used for e-commerce payments to traditional banking. Everything is fast, simple, and transparent, and highly anonymous. And Tesla even goes to prove how liquid cryptocurrency is by selling off millions of dollars worth of Bitcoin. Since this is still considered new and people are thinking that it will be the future, you can make a lot of money once there is mass adoption. But of course, you can't forget about the risk. Number 2, risk of investing in cryptos. It's subject to high volatility, meaning crazy price movements. If you lose, you could lose a lot of money. Also, since it's 100% virtual, it has no intrinsic value. There's nothing to back it, no government nor banks. Since it's not backed by anything and you ever get hacked or send or lose your crypto, you can't simply just get it back. When it's gone for good. Number 3, you will be taxed on your gains. Now, this depends on where you live, and I see why so many people are confused about this, because someone living in the United States will have a totally different tax system than someone living outside of the United States. And it also depends on the crypto wallet or exchange that they're using. So let me give you an example. If you live in the United States and you use Coinbase, which is a well-known US-based company where you can buy and sell cryptocurrencies, and you bought Ethereum at $1,000 a while back, and now it's trading at $4,000, and you want to sell to lock in your gains. Once you sell, that $3,000 you've just earned will be subject to tax. And this depends on your tax bracket and whether you held it over a year or not. So just know that if you made money on cryptocurrencies and you live in the United States and bought and sold crypto with a US-based company, most likely you'll be paying taxes because the government will probably know. Also, this applies to buying stuff with your crypto. Even though you didn't sell it, you still reap the benefits of using it with your gains on it to buy stuff with it. Number 4, you can buy a fraction of a cryptocurrency. So in stocks, depending on the brokerage, some brokerage won't allow you to buy fractional shares and you'll have to buy one whole share. But in the world of cryptos, it's different. You can use $1 to buy Bitcoin if you wanted to, because Bitcoin can be divided down to 8 decimal places. So with a couple of dollars, you can also be part of the crypto hype. Number 5, how prices move. So for stocks, prices move because of news. If news is good, the stock price will go up. If news is bad, the stock price will go down. Cryptocurrencies are like that, but it's mostly just hype on social media for now. There's no intrinsic value or fundamental behind it. It's whenever Elon Musk wants to give a shout out to a crypto and then drive the price over 20% just overnight. So yeah, it's totally speculative and mostly based off of people hyping certain coins. The more people talk about it and buy into it, the higher the price will go. Number 6, how do you know which cryptocurrency is good to buy? To be honest with you, you can't really tell or predict which one would be the best, but there is a couple indicators that you can use to help guide you in terms of buying crypto. It's not the best, but it's something at least. And again, this is not investment advice. But generally speaking, cryptos with a large market cap is usually more stable and consistent, but for crypto standards though. Understanding the usability of it will also help tremendously. And following the hype can get you in at a better price before it starts to die down. Although this is risky, you'll definitely have to do your own research first before jumping on the bandwagon. This approach is more of a short-term thing where you buy low and sell high. Number 7, cheap altcoins can be pump and dump. Altcoins are cryptocurrencies other than Bitcoin. So if you see some really cheap stuff on the market, for example, if you see a coin that is 0.000001 and some random dude is talking about how if you just invest $100 in it and if the coin hits $1, you'll be crazy rich. Yes, I'm talking about those coins. Coins like that are most likely aren't listed in the exchange. And you have to figure out different ways to buy it and figure out how to sell it. And that's usually the hardest part. In general, I just think that those are a waste of time and will make you lose money. Your best bet is to stick with coins with a large market cap. Sometimes things that cost a fraction of a penny to buy usually isn't really worth it. Number 8, hot and cold wallets. When you have cryptocurrencies, you'll need a wallet to hold them. Just like when you have cash, you'll probably want a wallet to hold them. There's two different types of wallet, and this will be just a general overview of it. There's a hot wallet and a cold wallet. A hot wallet is basically a wallet online. It's connected to the internet and you can access it anytime. The only drawback to this is that it can't protect you from hackers. A cold wallet is not connected to the internet. Instead, it's on some type of hardware written down on paper, some USB or storage device. Basically, you're offline for the most part. A cold wallet makes it harder for hackers to get your money and is considered the safest option to protect your cryptos. So whenever you can, try to get yourself a hardware that you can store crypto. You have to jump more hoops than a hot wallet and pay a small fee for it, but it's worth the protection in the long run if you have a lot of money invested. Number 9, you can earn high interest with crypto. You know how traditional banks give you like 0.01% to have your money sit there? Well, places like BlockFi or Gemini, where you can put your cryptocurrencies in, can make you up to 8% in interest. Granted, sometimes cryptocurrencies can easily lose about 8% just overnight, so sometimes it could be a hit or miss. But if you're investing it in the long run and not planning to use it, might as well take advantage of earning some interest just by holding it. And of course, you have to meet their basic holding requirements to start making interest. Number 10, not all platforms allow you to buy crypto. So here's something beginners might not know about. There's a difference between actually buying the actual cryptocurrency and just buying to trade like a stock. The platform that I mentioned, like BlockFi and Gemini, you can actually buy the cryptocurrency, but platforms like Robinhood or Webull, you can't actually buy the cryptocurrency. In this case, you're just trading it like a stock. Now, which one do you think is better? Well, it depends, because trading and buying has their own pros and cons. If you're not looking to hold a cryptocurrency, you can simply trade on platforms like Webull. You'll take advantage of zero trading fees, plus if you already have an account with Webull or Robinhood to trade stocks, it might be easier for you to have everything in one platform. The only downside is that you don't own the crypto. If you're curious about the Webull platform, go check them out. I use them all the time. Plus, if you sign up, you get 2 free stocks that could be valued up to $1,850. So yeah, now for the platform where you can buy the cryptocurrencies, the pro is that you get to own the crypto and you have more control over it. Also, you get to earn interest and make money with it, but it varies with different platforms. Now, the downside is that you'll have to pay fees, whether it's buying or withdrawing, and this again varies on the platform, and sometimes the fees could be pretty high. I mean, if you're getting something this good, it can't be free, right? Overall, most importantly, when investing in crypto, do your research first. This might give you a perspective or a little insight of crypto investing, but there's a lot more to know than just this. But I hope this helps, and if you are interested to know more about trading crypto on Webull, feel free to check out my videos down below. If you like this video, feel free to give it a like and maybe consider subscribing for more videos like these. I'll catch y'all later.